But it's Reliance Industries that we have been monitoring closely as it hits one milestone after another, the next one being just 16 rupees away from that 10 lakh crore rupee market cap. So we'll talk a little bit about their digital initiatives as well as what they're doing on the refining business and their overall growth potential. Jal Irani joins in from Edelweiss Securities. Thank you so much for being with us. To begin with, let's talk about what's going on in telecom. That seems to be the hot topic as of now. They've really been on, a spree of gaining subscribers. Just the month of September, the kind of numbers that we've seen have been fairly encouraging. They're looking at that new, creating the largest digital service platform company as well. So just take us through what exactly your outlook is in terms of a target for RIL as it's knocking on the 10 lakh crore market cap as well.
So I think you put too many questions together. Firstly, on the telecom things, space, two things that I'd like to highlight. Firstly, we've seen now very significant consolidation in the industry take place. We have seen Reliance gain very significant market share with nearly about 360 million subscribers. And now Reliance's and the industry is in a position to capitalize on operational leverage. So this is when basically you start to see tariff increases, which then adds exponentially to bottom line. The second thing is that I don't believe that Reliance is complete in its process of acquiring market share. And that, in fact, at the feature phone level is a process which is poised to get a significant impetus because, as you know, for the Jio phone, it has cut prices at the entry level very significantly, which then allows it to capture those feature phone customers and then enable it to upgrade to the smartphone level. So I think this business is poised in a very strong position, and Reliance is now in the process to capitalize on the same.
Sure.
Sorry, what were your other questions?
No, I just wanted to know, now that we're just points away from that 10 lakh crore rupee market cap, wanted to know what your 12-month price target is on Reliance, and given the kind of steady ship that Reliance has been.
Yeah. So, our target price is in excess of 1700, I think 1716 or thereabouts. But more importantly, I think beyond telecom, Reliance is firing away on all cylinders. It has, as you know, spent about $60 billion in capital expenditure across sectors. And all that capital expenditure is now beginning to result in significant revenue and profit growth. So for all practical purposes, we think with this current capex spend largely done with, that itself is going to drive earnings growth by 12 to 15% over the next 5 years, which means roughly a doubling in earnings. And this is going to be the case across the board. So even in the refinery business, it's petcoke gasifier, which is a $6 billion project, is just going to be announced as commercial production by either this December quarter end or March quarter end. Similarly, it starts a $6 billion production from the upstream oil and gas by the middle of next calendar year. Now, each of these two projects would add about 10 to 14,000 crores per annum. So it's not just telecom, but even its bread and butter traditional businesses, essentially the relatively lower risk businesses, are going to materially add to profitability.
Valuations as well, then, Jal, we've seen them expand. What would you say about that phenomenon? What would you attribute it to primarily?
So, so obviously there's an earnings growth, but also there has been a lot of risk mitigation, and that is driving valuations ahead of earnings growth being assured. Now, let me give you an example. When we had the same conversation about 2.5 years back, the question everybody used to ask is, will the Volti technology work? Will the, do they have enough infrastructure? How will they get customers? So at that stage, basically the market, along with us, we were giving a 30 to 50% discount on invested capital. So that's, so everybody was giving a huge risk weightage to projects, and this being the most extreme. Now, the fact of the matter is it's got its customers, now it's got its technology fully in place. Those are not questions. And as a result, you're getting a valuation re-rating ahead of a significant earnings growth, essentially.
Sure. Of course, we're still watching out for this possible stake sales in the various businesses as well. I just want to understand the kind of risk you see on this front as well, Jal. If the market seems to have already priced in to a large extent, what could possibly be expected there with regards to asset monetization. How are you seeing this play out?
So let me first go back into history, and if you go back to 2005, 2006, in roughly similar circumstances, the stock had actually rallied about 40% under a similar restructuring perspective. I think we're yet to see that sort of a rally currently. Secondly, the magnitude of the restructuring is very significant and across the board. And in this case, the restructuring is not just about stake sale and monetizing the value of the true value of assets and therefore trigger there, but also very material debt reduction. And in this current environment, unlike 2005, 2006, debt is, as you know, a four-letter bad word. So that simultaneously is actually resulting in risk decreasing. My personal view is that, or our analysis shows that we are actually on target to have debt going to zero within a couple of years. I'm in fact of the view that some amount of debt is beneficial to all companies, because the cost of debt capital is low, and of course if you've got a modest amount of debt, then that actually reduces your weighted cost of capital and enhances your equity value. So personally, I would be happy if actually Reliance retains some debt on the balance sheet rather than goes to a zero debt company.
Track BPCL as well, right?
That's correct, yes.
Yeah, so just wanted to know your thoughts on this divestment, whether the best in terms of a stock price move, at least in the near term, is behind us. And this in the backdrop of not just the government announcing the divestment, but we at ET now are picking up that, BPCL is also going to monetize other holdings before the government exits its stake. They're looking at offloading IGL, Petronet LNG, they're holding in that, and that is also going to be on the block.
So I think the divestment as a whole is a good thing. Global majors on an average quote at about 7.5 times EV to EBITDA. If you look at BPCL's core business, it's at about 5, maybe 5.5 times EV to EBITDA. So therefore, there is a potential value trigger if the divestment happens. Now, spinning out the core parts of the business spinning out investments such as IGL, etc. I've also read that from the press. And my thought is that I think that's a good thing, because firstly, a potential buyer who wants to buy into a refining and fuel retailing asset doesn't necessarily want to buy into an energy conglomerate. So therefore, to that extent, it makes it easier to attract buyers. The second thing is also that under the current circumstances, the ticket size could be a very large $9-10 billion. In addition to that, a potential open offer. So then the ticket size becomes extremely large. And by reducing these bits and pieces by $2-3 billion here and there, it makes the ticket size also more affordable. So I would think that this is relatively the right way of doing it.
All right, thank you for joining in and sharing with us your thoughts on the business of Reliance Industries as well as your targets.
Thank you much.
And BPCL. All right, that's a word coming in on RIL. Just a quick look as